Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Jeff Peterson looks at corn and soybean markets. Scott Irwin examines the EPA's renewable fuel standards. Bob Wright talks about corn rootworm resistance, and Ron Plain discusses break-even margins in the hog industry. Jeff Peterson from Heartland Farm Partners is our corn and soybean market analyst this week. The USDA is scheduled to release its December crop report Wednesday at 11 a.m. Central Time. Before the agency's latest estimates of the year in that area, we talked with Jeff Friday morning about El Niño's possible influence on prices, the strength of the U.S. dollar, and recent price movements in corn and soybeans. We saw some lively movement in corn and soybean markets this week. What was behind it?
You know, that was some nice, lively movement, Jeff. It was nice to see corn can actually go higher. A lot of the strength really came, out of Europe. The European Central Bank didn't reduce their interest rate, their deposit rate, as much as what everybody thought, and they came back and said they're committed to continuing buying bonds out into March of 2017. That ended up sending the euro much higher and actually pulled the dollar back. We went from over 100 before that announcement to back down to about 98, and anytime you can reduce the dollar, it gets everybody more interested in buying commodities, and yesterday it was definitely strong for corn.
When you mentioned those numbers, 198 on that dollar index, explain to me what that means.
Yeah, the U.S. dollar index, that's made up of 6 world currencies. So the reason we saw a big move yesterday, Jeff, is the euro is so much higher. That makes up actually 50% of that world index. So that when the euro traded higher, it forced our dollar index down. And actually this level that we're at, we're going to have to see. It was a key reversal, so we'll have to see whether or not that's going to be setting a trend going forward.
Let's move into the RFS. Short or long term, what role do you think these finalized volumes will have?
As we take a look at it, I think longer term, I think it was a good, strong move for the biodiesel industry. As we look at corn, we're saying it didn't do anything to hurt it. It kind of puts a floor underneath it, but we really think what ends up getting produced in ethanol side is more going to be determined by the economics of running the plants than necessarily the mandate, because we're already running above the mandated level right now, and we think that will continue on into 2016.
We've talked El Nino before, but now that South America is in the middle of its growing, at the beginning of its growing season, do you have any firmer thoughts on how it might impact that down there?
Yeah, we're continuing to monitor that very close, because we do think it's going to be a strong enough item and it's a strong enough El Nino to get some market talk and market attention. In the long run, we don't think it's going to impact yields. But now we're a little farther along. It still looks like it's hanging in there. There are some forecasts of it starting to drop off. What it is going to do, though, is it's going to give them some warmer than normal temps, a little bit drier than normal in their northern and northwest regions, which we think will help support the market and give us a bounce at times.
There's reports indicating that in Argentina, when its president takes office next week, he'll scale down the soybean export tax from 35% down to 30%. And of course, there are also reports that he's going to scrap the corn and wheat quotas and tariffs. Do you think this is something that has an impact on U.S. farmers?
You know what, I think it's something we have to watch very closely. On corn and wheat, I don't, Jeff, think it's going to have a big impact. They've only got about 1.5 million metric tons of stocks around and about 3 million metric tons of wheat stocks. Those are both less than about 1% of the world supply. Over on the Soybean side, though, they've got about 31 million metric tons. That's about 36% of the world's stocks. I think what it'll do, it won't impact the prices, but I think it's going to change a little bit, the supplying. So it could have a little impact on our basis levels here in the U.S.
As you mentioned before when we were talking, the dynamics of South America, or Argentina specifically, is that they don't export a whole lot of whole beans.
Yeah, they don't. And the interesting part about that is that because of basically the tariff or tax that they had on them? I think that's definitely impacted, because last year they only exported 10 million metric tons. That's not very many. So I think we're going to keep watching that, see if they continue putting out product or if they put out some whole beans. But overall, we don't think it'll be enough of a move to be a market maker.
As you start to look towards the 2016 planting season here in the U.S., tell me where the corn to bean ratio is right now and that you're tracking.
Yeah, that's a good question, Jeff. As we take a look at that number this morning, it's about 2.3 to 1, putting soybeans to the corn. As we run through our numbers, what that means is it probably means we're expecting about 2.7 million acres more of corn, about 400,000 more acres of soybeans. And what it looks like, we think a lot of those acres are going to come out of the prevent plant that there was last year across the eastern corn belt.
Let's talk about some selling strategies here. Now, if you need to move something before the end of the year, you guys are kind of lurking in the weeds, yes?
We are. Over on the soybean side, you got to look at it. We've had a 50-cent move in the beans. We're getting up in this area. Resistance above us is about 905. That's an area where we'd like to let go of some of these old crop beans. If you haven't done much on the new crop side, get ready also for that. Over on the corn side, though, we probably still want to hold tight a little bit. We still think there's a little bit more room there for the market to move higher. It hasn't had near the move that soybeans has had.
Longer term, where do you think realistically these two markets could go?
As we sit back and look at longer term, we still think there's going to be more to come out of El Nino. So we think there still could be a little bit more of a bounce, and that's why we're only wanting to move beans that you'd have to move by the end of the year. We think as you get into the first part of the year, you'll still get a better chance to sell a higher price for both corn and soybean prices. Now, on the basis side, you're going to have to be careful. That means that basis will widen out, so getting some basis locked up in here soon is probably be a good idea.
We'll have a look at hog markets later in the show with Ron Blaine. Next week, we'll look at the USDA's December crop report and its impact on corn and soybean markets. The Environmental Protection Agency has finalized renewable fuel standards for 2014, 2015, and 2016. The overall level of renewable fuel to be blended next year will be more than 18 billion gallons. That's below what was originally set in 2007, but above what the agency proposed in May. Nebraska is the second largest ethanol producer in the nation, behind Iowa. This state's industry supports the equivalent of 1,300 full-time jobs and averaged an annual production value of $5 billion over the last 3 years. Earlier this week, we talked with the University of Illinois ag economist Scott Irwin to get his thoughts on the EPA's final requirements.
Well, I think they were very interesting. They were quite close to my expectations. The ethanol came in for 2014 at 13.61 billion gallons, which I think was widely expected, technical adjustment. But what apparently surprised many was how aggressive the EPA was in adjusting upward the 2015 and 2016 ethanol mandates. 2015 went up to 14.05 billion gallons, and 2016 all the way up to 14.5 billion gallons.
What have been the challenges to reaching that initial 15 that they set a number of years ago?
Well, everything has revolved around the E10 blend wall, which means that there's 10% ethanol in the vast majority of the gasoline offered in the United States, and the standards, if you go up to 15 billion gallons, for example, that would be more ethanol than we can consume in the form of E10. And that's where the rub has been in terms of should we move forward and, in essence, force breaching of the E10 blend wall or not.
Do you think that the EPA does intend to get to that 15 billion at some point in time?
Yes, I do. The administrators have made a number of statements indicating that they want to, quote, get the RFS back on track. And after reading through the proposal yesterday and the kind of arguments that the EPA made in that proposal, the final rulemaking, I wouldn't be surprised if they went back to the 15 billion gallons in 2017, again, if market conditions seem favorable for that when they make the proposal next year.
You mentioned the last time we talked that you thought biodiesel could be a winner in this. Do you think it came out as one?
Absolutely. Biodiesel and renewable diesel, which both come under the heading of the biomass-based diesel category, definitely are in the catbird seat moving forward, at least for the next year or two. The big battle that's shaping up is for those gallons that are above the E10 blend wall. Will those be met with higher ethanol blends or biodiesel and renewable diesel? I think the EPA certainly came down on the side that in the short run it will be biodiesel and renewable diesel, and I agree with that. But as we look down the road, that's where we're going to see in a year, maybe two, as long as 3 years down the road, E85 could, with some time, become much more competitive and put a cap on some of the expansion of biodiesel. But until we get to that point, it looks like smooth sailing for that industry.
What do you think these volumes say about the clout of agriculture and biofuels?
My own personal view is that the history of the political battle over the RFS, where we are today, shows the continuing power and muscle of the ag lobby in Washington, D.C. The way I think, best illustrate that, Jeff, is if we go all the way back to 2 years ago when the EPA first made their original proposal for 2014, basically that proposal said we're just going to cut off the ethanol mandates at whatever the E10 blend wall is, and we just don't see much on the horizon reason to try to breach that to any significant degree. And if you projected that framework out through the current end of the RFS in 2022, you would get something around a 17 billion gallon total cut in the ethanol mandate between 2014 and 2022. Fast forward to today and the rulemaking that was released yesterday, the what I think are the projected total cuts now are just a little over 2.2 billion gallons. I mean, that's a huge swing in fortunes in 2 years for the ag and biofuels sector.
Each year, the EPA is required by law to finalize renewable fuel standards for the following year by November 30th, meaning all of 2017's levels should be set by the end of November 2016. The December Nebraska Farmer says January will mark Mike Pallas's 34th year as farm manager at the Omaha Home for Boys Cooper Memorial Farm. In those 34 years, around 600 youth have participated in the Valley View 4-H Club. This month's issue says many of the kids had never been exposed to agriculture or livestock before coming to the farm, and it's been Pallas's goal to open their eyes to agriculture and possible careers in it. To read about Pallas's 34 years as manager at Cooper Memorial Farm, you can check out the December Nebraska Farmer. Insect-resistant corn varieties known as BT have been available in the U.S. since 1996. Farmers have used that seed to help control insects like rootworms. U.S. growers planted only 8% of their corn to a BT variety in 1997, but that number has significantly risen. Producers in 2015 used BT corn on 81% of U.S. corn acres. Earlier this week, we talked with Nebraska Extension entomologist Bob Wright about rootworm resistance that's now developing in states such as Nebraska. We started by asking how widespread the resistance is.
We've been doing work in the entomology department the last couple of years, and other entomologists in other states like Iowa have documented now that there are some populations of rootworms that have measurable levels of resistance to 2 of the 4 BT proteins that are used in corn hybrids now. And so we found rootworm populations basically across the state that have some level of resistance, not every field in a county or an area, but pockets of resistance from northeast Nebraska to southwest Nebraska. So it's pretty widespread geographically, but in a particular county, not every field is going to have a problem. It depends a lot on the past history of cropping in that area and what type of hybrids they've been planting.
To what extent can that resistance cause significant damage?
Well, it can definitely have an effect, because if you're only relying on the Bt hybrids to control rootworms and you're growing corn after corn repeatedly, rootworm populations will build up and they can be high enough to cause economic damage or lodging if you're not using other supplemental control measures.
So what does a grower need to ask themselves to determine if they might have a problem?
Yeah, we can't survey every field. It's a pretty long, laborious process to really detect or confirm that we have resistance, and we've been doing work the last several years, but there's some things for growers to ask themselves. You know, higher risk factors for problems with rootworms would be if you grow corn after corn repeatedly, if you grow the same type of Bt hybrid that expresses only one active protein against rootworms, that's a risk factor. There are hybrids now that have two proteins that are effective against rootworms, and those are less likely to have resistance develop. And then if you're using other control measures as well, that can reduce the risk for problems showing up by suppressing populations.
How necessary is crop rotation?
Well, it's the most effective management practice we have for rootworms. And I know with economics, a lot of people don't want to grow corn or rotate corn every other year, but the general recommendation, if you can rotate at least every third year, that can really help keep rootworm populations down to a lower level.
So is the recommendation then not to rely on a single treatment, whether it be insecticide or a specific Bt variety?
Right. Using a diversity of tactics is really important in resistance management. We've had past instances of insecticide resistance in Nebraska with rootworms, so whether it's an insecticidal protein in the Bt corn or an insecticide that's applied, we don't want to do the same thing repeatedly, and that's where we've had problems before. And interestingly, with the Bt hybrids, there's evidence that even as few as 3 continuous years of using the same single trait can lead to resistance development, or it has happened, been documented.
How concerning is that level of how quickly they can adapt?
Well, that's one thing that's really curious or interesting about rootworms. They have adapted to a lot of our control practices in the past. So we want to be aware of that when we try to manage rootworms, is not to do the same thing repeatedly, because they probably will get around it eventually.
All right, coming up in January, crop production clinics, you'll be presenting on this topic. Tell me what you'll be presenting about specifically.
Well, there's a new information on a website developed by or maintained by the National Corn Growers Association that has some decision tools and questions that growers can ask themselves to determine their risk for resistance development, and then depending on the level of risk, what type of management practices would be appropriate. And their first recommendation is similar to ours, is that crop rotation is the most important thing, to either rotate different types of Bt traits or use hybrids that have 2 proteins that are active against rootworms if you have problems with rootworms. Having high populations of rootworms doesn't necessarily mean that you have resistance, but it is still something you need to manage. You need to change practices to reduce the rootworm populations.
On the Market Journal website, we'll link to that National Corn Growers Association website Bob mentioned. That contains resources on rootworm management practices. We'll also put a link on our homepage to more information about the 2016 crop production clinics, which will take place at 9 locations in January. We also have a look at hog markets this week with University of Missouri Extension economist Ron Plain. The latest USDA livestock slaughter report shows pork production from January to October was up 7% from 2014. October itself was 2% higher than a year ago. Prices have reflected that abundance of supply. We talked with Ron Tuesday afternoon and started by asking him to give us an update on how hog markets had moved over the last few weeks.
It's been kind of what we normally get this time of year, which is a lower trend. Prices have declined to around $40 on a live weight basis, 50 or so, 52 on a carcass weight basis, but hopefully we're close to the bottom for the year.
What's moving the market right now?
An awful lot of pork is on the market right now, Jeff. Weights in mid-November were above a year ago for the first time after 34 consecutive weeks of being down, and hog slaughter is very high. In fact, last Saturday's slaughter was the biggest ever for a Saturday. So lots of pork on the market and weaker prices.
Do you fear that those higher weights are reversing a trend now, or could it be just an exception?
I'm sure hoping it's an exception, but seasonally hogs tend to be heavy this time of year. Pigs like cool weather, they eat more and weights go up. I'm hoping that they'll at least stay close to a year ago, if not down, through the rest of the winter.
So where are break-evens at now, Ron?
Well, on a live weight basis, somewhere in the upper 40s and the low 60s on a carcass weight basis, and that's one of the things that's positive for the hog industry. Feed costs are down compared to the last several years, and so these lower hog prices aren't quite so painful.
Yeah, can you go further on that, the impact that cheaper corn and soybean meal prices are having right now for the producer?
Well, yes, this is 2015 is going to turn out to be a profitable year for the average producer, and a lot of that is due to lower corn and soybean meal prices. The third largest corn crop ever this year, and so we've lowered those feed costs, and feed's usually about 60% of the cost of raising hogs. So we're probably going to lose money in December, but still we're going to end up with 8 or 9 months of profits here in 2015.
Let's talk about international demand, Ron. Pork exports up 18% in September. Where was the strength coming from?
Hey, that was a good month. We'd been down most of the year, and it looks like here in the fourth quarter we're going to export more pork than a year ago. Mexico has been a strong market for us. South Korea's also been a very good market this year for pork exports.
What's your confidence level in those big buyers, South Korea, Mexico, Japan? Do you have confidence that their economies are stable enough that they'll be willing to still buy?
Well, both the South Korean economy and the Mexican economy seems to be doing well. I'm confident we'll move good quantities of pork there. Also, some indication we may be able to put more pork into China during the fourth quarter this year than we did a year ago.
Do you foresee the Trans-Pacific Partnership having a big impact in pork?
Eventually, yes. U.S. hog farmers are very competitive on the world stage, but implementing this Trans-Pacific Partnership trade agreement is a 2-year process just to finalize, for countries to vote on it and finalize it. So it's more down the road benefit for hog farmers than anything it's going to do in 2016.
Okay, here in the U.S., how do you see the struggle playing out between beef, chicken, and pork as we go into 2016?
There's going to be more of all the meats, it looks like, than we had this year. But for the pork industry, probably the smallest increase of the major meats, up about 1.7% by USDA's latest forecast. Pretty hefty increase expected in both chicken and beef. Beef prices are very, very high, just slightly off the record. So most of the price decline is probably going to come in beef prices. Pork prices very similar in the grocery store next year to this year.
Now with this week's weather forecast, here's Nebraska Extension State Climatologist Al Dutcher.
Well, folks, here we are again back for the weekly forecast after we had our break from the holidays. And during the holidays, we did exactly see some good precipitation across eastern Nebraska in the form of rain and a little bit of snow and ice. That moved through on Thursday. Then we had that upper air low kind of sit over our region and spin itself out. And as it spun itself out, we had several consecutive days of precipitation around the state in the form of snowfall. And then as the system finally started to lift toward the east on Monday, on the backside of that, we did get some decent to moderate snowfall across portions of northern Nebraska. So everybody got to share a little bit in the snowfall. And when we look at the temperatures, the 5 days in a row that we had for below normal temperatures across the state represented the longest stretch of below normal temperatures since the first part of October. So it's been a while since we've had these type of temperatures. And in fact, if it wouldn't have been that we were sitting with a cut up over a little low over top of us with the cloud cover, we probably wouldn't have been 1 or 2 days of below normal temperatures, with much of the Arctic air not coming down southward with these systems as it's been bottled up into Canada. And that's a trend that we would expect to see for the majority of this winter during an El Nino type system. Most of the cold air remains to our north, and we're dealing primarily with a Pacific Ocean type weather coming into our region, meaning very mild weather with the lack of significant Arctic air. Now, as we go through this next week, we expect to see some rather benign conditions, and a good stretch of dry weather appears to be in store. A couple systems will move through the state. It doesn't look like there's going to be much moisture with that. So let's take a look at the upper air models. The first system's moving through the plains today. Most of the activity is going to be to our south, with a little bit of on the backside of this low, a little bit of activity possible across the panhandle in central Nebraska, mainly in the form of light rain showers or snow flurries. But it really, in terms of the precipitation output from these systems, less than 1/10 of an inch is expected over this 24-hour period. Now, as we get into tomorrow, that system will pass to the east, and other systems coming from the west, moving rapidly toward the east in more of a zonal-like flow. So it's not going to have good moisture from the Gulf moving into the system, so it'll be a dry front as it passes, and that will come through the region as we get into Monday. As it passes through the state, might see a little bit in the terms of partly cloudy, but again, most of the energy with this system stays to the south of the state. As long as it doesn't lift northward, we won't have any problem. If it does lift northward, we could see a little bit of precipitation on Monday, but right now the models have been trending more toward the south with each consecutive run. As we get into Tuesday, we see another piece of energy trying to move through. There may be some flurries and snow activity in eastern portions of Wyoming, northern Colorado, and some of that might make it into the panhandle, but right now it is showing the system to be diving toward the southeast and Michigan the state. As we get into Wednesday, you can see the system moving out toward the southeast. High pressure builds back in, and it looks to be fairly benign for the day on Thursday before the system comes in late in the day, starts to push through and generate the possibility of some light snow showers again on Friday before we turn our attention to a big storm system taking shape in the western United States. So let's take a look at the temperature forecast. We're looking at fairly benign conditions, just that outside chance of a little bit of scattered light rain or flurry activity on Saturday and again next Friday. 8 to 14 day forecast. It takes us from next Thursday to the following Tuesday, shows above normal temperatures. And in terms of precipitation, above normal across the United States, although this is way overdone as most of the systems now are being projected to go well south of the state.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, renewable fuel volumes, corn rootworm resistance, and recent movement in hog prices. As always, you can keep up with Market Journal during the week by following us on Instagram, Twitter, and Facebook. Next week, we'll look at the USDA's December crop report, and Brad Lubin will discuss efforts to reform property tax policy in Nebraska. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.